Australian Unity has just announced a joint venture with Asian equities boutique manager Ceres Asset Management. Today we have Australian Unity Chief Executive David Bryant with us to talk about what it means for the business. Thanks for joining us today, David.
My pleasure.
David, who are the principals here and how did you find them?
There's two key principals in the business and we have 4 investment staff as of today. The two principals are Evan Erlandson and Ken Liu. They're a very interesting pair. Evan was born and raised in the US but took himself into China in the early 90s where he studied Chinese language and economics and history. He then went back to Harvard University and since that has been working exclusively in China and Hong Kong. Ken's done the mirror opposite. Ken was born and raised in Beijing, did his initial studies there, went to the US for the best part of 10 years where he did a PhD in finance and then also went back to China and Hong Kong to work. And I've gotten to know through work both Evan and Ken over the last couple of years, and the changes over the last 12 months gave us an opportunity to look to start up a business with them. So,
why have you decided to do this now and how long have you been scouting around this space?
This is a space that's been of interest to me really from the time I joined Australian Unity, and particularly over the last 2 years as our joint venture model that we've been using has been growing very successfully in this market. The opportunity, though, is always driven by getting access to the right people, and we've been very patient in making sure that we don't start these sorts of businesses until we know that we've got the right people, which we do here with Evan and Ken. But they became available largely because of the global financial crisis. Evan most recently was Senior Managing Director of Asian Equities with Bear Stearns, and as a lot of the US banks have been through that restructuring period, there's been a very narrow window where some extraordinarily talented people have become available. And in the middle of all that noise, we saw an opportunity to get access to some people to build a business around.
Is there any ownership by Australian Unity in the Ceres Asset Management business?
Australian Unity owns 50% of the business and the principals of Ceres own the other half. We've set up this joint venture boutique exactly as we have all of our Australian joint venture boutiques, where we own half of the business, the key investment principals own the other half, and over the last 5 years it's proven to be a very, very successful model for us. It's allowed us to put opportunities with some of the best investment people in the market, to build businesses with them, and most importantly to keep those people with us and the business working together. So it's a model we think very highly of, and it's proving to be a good one.
What's the investment philosophy of Ceres?
Ceres at its core is a fundamental bottom-up stock selection company. There's a couple of unique attributes about it though. Asia itself is the growth region. Everyone around the globe is looking to Asia to lead us out of the economic doldrums at the moment. And Asia also, since the Asian currency crisis in the late 90s, has improved its governance, its share markets, its banking systems. But there's still some significant benefits from being in the region. So, for example, there is a lot of information on the very big companies in Asia, but very little research still on the medium and the smaller cap securities. So people with Evan and Ken's backgrounds who've got decades of experience living and working in the region with that stock selection approach are going to be able to pick the good stocks and stay away from the bad stocks.
What's the regional mandate of the Ceres Asset Management business?
It's the full Asia Pacific region, excluding Australia obviously. So primarily we see most of their attention being in Greater China, so that's mainland China, Taiwan and Hong Kong, Japan, Korea and India. The Southern Asian countries, we're not excluding those, but we'll be looking at them as we think investment opportunities present. But they're not a significant component of the region.
Is it fair to say that this is more of an emerging markets mandate?
No, I'd describe it very much as a developed or developing markets mandate. And the reason I describe it that way is Japan is a very developed market, and arguably Korea is as well. China, Hong Kong and Taiwan are developed or developing markets. India is developing, and some of those more emerging markets, perhaps the Philippines and Thailand, they will only be very, very small components of what they're doing here. So we see Asia in two parts: a developed or developing component and an emerging component.
People say the Australian Unity model is to choose fund managers who tend to do things a bit differently. Would you agree with this?
It's absolutely what our model is about. Australian Unity is a specialist asset management company. We don't have large tied distribution, so we have to earn our participation with investors in their portfolios based on the quality of what it is we bring. You can't do that with a Me Too product. So Vianova Asset Management, Platypus, Acorn, Wingate and now Ceres are all very unique about what they do. The Ceres team, though, there are a couple of things that are special about how they will be doing Asian equities. Asia has very strong system growth. It's the region that will grow more than the others. But having your entire investment team for Australian investors on the ground in Asia with their depth of experience and their understanding of markets is actually quite unique. And we think, again, that's going to help us, one, tell the story about how we think people should invest in Asia, but two, to earn a place with investors to invest.
You now have 5 joint venture businesses: Acorn Capital, Vianova Asset Management, Platypus Asset Management and Wingate Asset Management. Of all those businesses, which is doing best at the moment?
They're all doing well. It's one of the things that we think we bring to the model is, and Vianova is an interesting story. When we first started the Vianova business, active fixed interest management was not really on anyone's agenda, but we invested the time and the energy with some very clever people who know their area, and we developed a business and we waited for the market to come to us. So at the moment, today, people are putting a lot more money into fixed interest, but they're putting, for example, less into equities. We don't think investors today are putting enough money into Asia, but as we build the business and the track record of the investment team, we think that will flow as well. So our joint venture partners don't have to worry about the market cycles. We know that investors move between the different asset classes. We get to take that pressure away from them as a business because we support them and we work with them and they really can ignore those market cycles.
Do you have any other joint venture businesses in the pipeline?
I don't have any in the pipeline. This month marks my 5th anniversary with Australian Unity Investments. It is just a coincidence that we've got 5 joint ventures, but it's a model that's proven to be very resilient, and it's one that we're very, very happy with for us, for our joint venture partners and for our investors. I certainly don't see us in the next 5 years doing anywhere near the number of joint ventures that we've done, but part of what we do is really to look for opportunities to partner with really good investment people. Don't have anything in front of me right now, but when those opportunities present, we'll certainly have a look at them.
Thanks so much for your time today, David.
Thank you.